Good day to one and all. This is Dr.Sivaraman of iknowindices.com. So I'll be presenting Asian session live market analysis, explaining the expected market moves and the range in which the currencies could trade for the week 12th to the 16th of August. And we are on 12th of August, the week beginning. Between 5 and 5:30 GMT, I'll try to review the currencies, how exactly they are expected to behave during this particular week. So let me explain to you the expected market moves with the help of the slide. So it is the third week of the month. So you come across more swing and quick rise moves are expected. And the expected market moves for each of the sessions of the 5 days of this particular week are displayed here. So today, 12th of August, swing and slide move is expected during that of the Japanese session. As usual, they are expected to make the week beginning false move. In the case of EURO and GBP, they could make a small dip and cut the initial low they are set, and then swing and rise during that of the European session. Probably the rise might be in the form of a firming up move also, if the traders' participation is less. Then again, US session, they will make a small dip and then start making the rise. Then they are expected to continue the rise on Tuesday and swing and firm up and swing and rise. Then Wednesday, they are expected to initiate quick rise moves after the slide during that of the late European session. And they are expected to swing and firm up during Japanese session, and swing and slide during European session, and swing and quick rise during that of the US session on Wednesday. That is midweek. Then, after the gains, they are expected to make a small slide and then make swing and quick rise and swing and rise moves on Thursday. Then, for the weekend, they are expected to make initially a dip and then rise. Then, again, make an upward swing and then slide, inducing the long holders to liquidate. In a bullish market, the players are known to make the initial drop for the long holders to liquidate the long positions before making further rise. So they are expected to induce during that of the European session a small slide that might give that impression to that of the traders to liquidate the long positions. On Friday also you would have noticed that they made the slide in the case of EURO and GBP about 50 pips, but that created a bearish feel for many of the traders. They immediately liquidated the long positions, what they had taken as a breakout trade after the rise. So this is the normal market move and normal behavior of the market. When the market becomes bullish, then the traders tend to buy at the higher level and the players try to make a small dip, make those traders, higher level buyers, nervous and liquidate the long positions and then subsequently gain more levels. And then coming Friday, they are expected to make a swing and quick rise move, and that rise will clearly demonstrate that the market is in the upward journey. In this particular week, we'll come across more of a contrarian move. Visible contrarian moves could be seen, and we may see Euro GBP as well as USD Yen. They are expected to make the contrarian move on the upside. And USD CHF is also expected to participate. At the moment you come across in the live market quote page, the USD gaining moves are there. Numerator currencies, Euro and GBP are showing negative net change. And the denominator currency, USD Yen and USD CHF are showing positive net change. But they are handling crosses, as you can witness, that USD CAD and Australian dollar, they are showing positive net change. This is a contrarian move in order to handle briefly the commodity crosses, and later on they will come to the majors. Among the majors, they are expected to show the green net change in all the four currencies. And so you can understand what will happen to that of the crosses. Let me explain it with the help of another slide. Okay. This is the live market quote page of the crosses. So you can see at the moment they are making the USD gaining move. So Euro is showing a nominal negative net change. GBP is showing nominal negative net change of 16 pips. And USD Yen is showing about 22 pips positive net change. And CHF is also showing 17 pips positive net change. Then if you look into that of the Yen crosses to start with, they are showing a nominal gain in the case of USD Yen. Because nominal gain in the case of Euro Yen. USD Yen, they gained about 22 pips, and Euro USD, they just dipped about 18 pips. And so you come across about 12 pips gain in the case of Euro Yen, because Yen has gained more here when compared to that of Euro. The denominator that is weakened. USD Yen has weakened. Yen has weakened or USD Yen has gained the level, and as a result you find a nominal gain of only 12 pips. And similarly, GBP Yen is showing a nominal gain of 19 pips. And you will come across soon that these currencies, Yen crosses, and similarly Australian dollar Yen, then CHF Yen. So all the Yen crosses, Canadian dollar Yen, they are all expected to make big moves on the upside in this particular week. So carefully watch and don't try to do sell and buy trades in them. And whenever they are closer to that of the low, you can try to take a buy and keep hedge order to limit the risk. And subsequently, when they gain the levels, you can keep stop at entry and try to maximize the profit. So all the Yen crosses, they are expected to gain the levels. And slowly they are just making Australian dollar as a negative 1 pip. And it is only a small swing here. Not much of an activity is happening. So in the case of the Yen crosses, then subsequently they are expected to handle the European crosses, like Euro GBP and Euro CHF and GBP CHF. These three crosses are to be handled nicely. And Euro GBP is expected to make a downward move in this particular week. And when it was around 87.50, I was explaining to you that they had done the extended upwards stop and in order to make a big drop. Now you can see that it has come below that of 0.86 on Friday, then hovering around that of 0.86. And they are expected to make a small gain of about 20-30 pips and then continue to dump Euro GBP. And in the case of Euro CHF, they have been holding around at a 1.23 area for a long time, and they are expected to gain more levels in the case of USD CHF and also in the case of Euro CHF. Then as a result, Euro USD, as a result, Euro CHF is expected to gain more levels. And so around 23 area, one can buy, keep hedging order to limit the risk, and you will be able to see a phenomenal rise in this as well to 1.25 area and above. So here you come across the Yen crosses and the European crosses are expected to make big moves. The commodity crosses like Canadian dollar Yen and Australian dollar New Zealand, and they will be less participative in this particular week. So they will be less participative and they may not be making any big moves. So especially the Yen crosses and also the European crosses are expected to make quick moves in the market. So since they are going to do more of a contrarian move in this week, I thought that I can explain to you how exactly the crosses are to be handled in this particular week. Then next week, 19th to 23rd of August, that will be the fourth week. And you know that they will make more quick upward moves during that particular time frame, and you will come across more new highs happening in the case of Euro and GBP, USD, CHF, USD, Yen, etc. Now coming to the levels at which these currencies could trade, let me use the live market code page for you to make a comparison. So euro is expected to come slightly below that of 1.33, about 10 to 15 pips or 25 pips. This is an arithmetic estimate. So there is no guarantee that it has to exactly come to that particular level. Sub 1.33 they could show, and currently the low is 1.3318, and they are expected to make a small dip during start of the European session, start of the US session. At that time they could make below that of 1.33, and so far they have shown the high is 1.3344, but euro is expected to gain to 1.36 area in this particular week. So you will come across in a day or two they will reach 1.35 and breach easily 1.34, which is considered as a long-term resistance, and stay comfortably above and come below that of 1.34, inducing the traders to sell and straight take up. So that is how the players do it. They allow all the technical analysts to analyze the market, use all the long-term charts, and also derive what could be the long-term strong resistance, and they will go up to that and make a drop. So they had done it initially last week, 1.34 they just taken the market and then dropped. So everybody will say that no, euro does not have a strength to go above that of the resistance. So it has come down. Then this time they will just breach 1.34 and stay above. Then everybody will say that okay, it has breached 1.34, so it can decisively go upward. Everybody will say that no, market has turned bullish, so euro one can buy any level. Then the players will make a drop below that of 1.34 from 1.35 area and just hit all the stops of the long holders. Then subsequently, when the traders think that okay, it is only a noise, it has gone above 1.34, it has to come down, then take sell positions, the players will take it to 1.36. So always they will try to play the trick. So if you blindly follow the charts without using our common sense, then we are bound to take risk in the market. Then in the case of GBP, they have shown the low as 1.5490, 1.5475. The arithmetic level is estimated low, and they are expected to go to 1.58 area. You could come across some aggressive gaining moves from that of the midweek. At that time they could reach 1.5657 quickly. Then currently the high is 1.5521. So as the week proceeds, I will update these lows and the highs and show it to you again on Thursday when I come for the review of this particular forecast and find out whether the market has moved in tandem with that of the expectations or it is just opposite or other way about. Okay. Then in the case of USD yen, 95.75 is estimated low, but they have shown 95.93 as the low, and it's unlikely to breach it, and they are expected to take further up. So this time it could go up to 99.50. 96.64 is the high they have shown around 3:30 GMT. Then in the case of CHF, 9200 is the low, and they are not expected to go below that of 92. And on Friday they have shown 92.88, 92.91 and things, 91.91, etc. And they are all accumulation strategy, and they are expected to gain more levels in the case of USD CHF in this week, similar to that of USD yen. So 92.17 they have shown it as a low. Then 95.25 it could reach by end of this particular week. So far the high they have shown is 92.43. Then Canadian dollar 1.0275 could be the low. They are shown up to 1.0281, and the high could be 1.05 area, and they are expected to consistently gain the levels in the case of USD CAD this week. Last week they made the drop and they had done the downward stoppings holding around 1.03, and they are expected to gain the levels now this week. Then Australian dollar consistently it has gained the levels last week, and 0.9172 they have shown it as a low. 0.9150 could be the estimated low, or they may not go much lower. but they could gain only nominally to 94.50 area, and 92.21 so far they have shown the high, and they can gain about 200 to 250 pips in this week. So watch for the range bound moves here. EURO and GBP and also USD YEN and USD CHF are expected to gain more levels. So try to focus on those currencies for trading, and you'll be able to really get the benefit out of that. And always try to do the buy and sell trade in all the four majors, and whenever they are closer to low, you take a buy, and once the position makes profit, keep stop at entry. Then try to maximize, because as I explained many times, the second, third and fourth weeks or position trading weeks, you can just take a position and hold it for a long time. You should be able to see a good profit, maximize the profit that way. Now with regard to the market trading technique, we note down the initial lows and the highs around 3:30 GMT in the case of four majors and two commodity pairs, and try to find out what sort of moves the players are trying to do it in the market. And so Euro 1.3318 is the low, 1.3344 is a high. They are not breached the low or the high from that of 3:30 GMT onwards. In the case of GBP also, they are not breached, and they are all narrow range swings happening. And in the case of Japanese yen, they made some about 50 to 55 pips swing, because Japanese traders are active during this particular time frame. 95.93 is low, 96.64 is the high, and they are expected to breach 96.64 and slowly take up the market on the upside towards close and also during that of the European session. Then USD CHF 92.17 is the low, 92.43 is the high, and they are showing 17 pips positive net change, and they are expected to gain the levels. Now you come across Euro is making 17 pips negative net change, CHF is making 17 pips positive net change. So it appears as if they are equal, but slowly they will gain more levels in the case of CHF holding Euro, and then gain levels in the case of Euro also. Then Canadian dollar also, they are not breached the low or the high, but the spread is very, very narrow, 19 pips. And in the case of Australian dollar, yeah, a decent 40-45 pips spread is seen, about 50 pips spread is seen, and it is flat almost. So it will be showing a nominal gaining moves during this particular week. One can do buy and sell trade, but suddenly after a good rise, they are expected to suddenly make about 100 pips drop and then recover. That sort of moves they are expected to make it in the case of Australian dollar. And you might come across it becomes more news sensitive currency, because that is how the players make it. So this time, so that they don't gain in tandem with that of Euro and GBP. Euro and GBP may consistently gain. Australian dollar will make wide range swings. So try to trade carefully when you are interested in Australian dollar trade. Now coming to that of the trading strategy. So entry is always near that of the low, a buy position, or near that of the high, a sell position, when that high or the low are not breached for 30 minutes from the start of the session. Then keep 30 pips hedging order to limit the risk. If the hedging facility is not available, then keep stop at entry. Then, keep stop and try to move it to stop at entry, and then try to maximize the profit. Once the profit becomes 25 pips and more, use the trailing stop instead of static stop at entry. Thereby, your profit will be protected. So you will first eliminate the risk in trading, then subsequently maximize the profit using a trailing stop and a trailing limit order or take profit order. That way you can maximize the profit. So first of all, in order to enter and exit from the market, you need to know the market timings. And I explained to you many times that 0030 to 7 GMT is the Japanese session, 7:30 to 13 GMT is the European session, 13:30 to 20:30 GMT is the US session. So the early part, 1.5 hours, and the later part, 1.5 hours, are the early and the late sessions. And in between the session is referred as the mid sessions. So mid sessions, they make the false move. And during the early and the late sessions, they handle the majors. and during the mid sessions they handle the crosses. So if you know carefully what currency they are handling at a given time with the help of the live market quote page, wherever the spread is more than 40 pips, that means they are focusing on that. Say for example, now they are focusing on yen as well as Australian dollar. They are making a contrarian move, gaining levels in the case of yen, gaining levels in the case of Australian dollar. So that way they are trying to do it, and slowly you will come across more contrarian moves happening in the market. So that you should be able to read it and try to make use of it for your trading decisions. So wherever they are active, try to enter into those currencies. When they are making quick moves, you will be able to easily book profit. So you will be able to do fearless trade. Otherwise, if you simply take a position in euro all the days, and if euro is not making a move, then you tend to lose your patience. So avoid doing that. Then you will be really able to enjoy trading. Okay. So early in the late sessions I explained, and they only handle two pairs at a given time that you need to recognize by looking into that of the spreads, what they are doing. So if the spread is more than 40 pips, and those currencies they are handling it, and also in the case of crosses, if the spread is more than 70 pips, that means they are handling the crosses. You will be able to identify the crosses that way, which cross is very active, more than 70 pips between the high and the low. Those crosses they handle it, and whenever they make a small dip, you try to buy, you will be able to see good profit, because today they are expected to gain levels in the case of yen crosses and also European crosses, excepting Euro GBP. Okay, let me take up the questions which are asked here. I will display the focus sheet page. Okay, Darren, what do you mean by wide range swings on Australian dollar? See, Euro and GBP are expected to gain about 300 to 400 pips in a week and continue to gain. And they should be able to gain about 1000 pips in a month. Whereas in the case of Australian dollar, they will gain about 150 pips or 200 pips, drop 100 pips. Then again drop 50 pips, then go 150 or 200 pips, then drop 100 pips, then gain about 100 pips. So it will be more of a sideways move, and not in tandem with that of Euro and GBP gains. Then they are expected to make the wide range swings, and that means between the high and the low each time will come across a very big range of 100 to 150 pips. And so if Australian dollar gains about 200 pips, in no time it may lose 100 pips or 100 to 150 pips. Then again it will try to climb back. That sort of moves is expected to happen. Then Jacob, Euro and USD CHF cannot go upward at the same time. There is no guarantee like that, sir. Euro and GBP cannot go upward all the time. They can use different stories. So that is what, they have given the impression to that of the traders that the market can do either a USD gaining move or USD weakening move. And there are so many times I have shown it using the live market quote page that Euro is also in positive net change when USD CHF was in positive net change. That means both are gaining. Only when Euro and USD CHF gain, then you will find Euro CHF will gain about 100 to 200 pips. So that can happen. That is referred as a contrarian move. If you watch such contrarian moves, probably during start of the Japanese session, you would have noticed that Euro and GBP were showing negative net change, and USD Yen was also showing negative net change. So that is a contrarian move. So that is how they make moves. So there is no hard and fast rule that when euro gains, USD CHF should not gain. Then there, where can we get that live code? Okay, live market code page, the link I'll give it if you want. Okay. Then see. This is my first time here. Where can I learn more about your strategies? Okay. If you go to fxtrade.net and you search for Dr. Sivaraman, and under my profile, you will come across the 10 webinars. Probably if time permits, I will show it to you. Okay. Because I am logged in, so I'll be able to click my page. Otherwise, you can just search for Dr. Sivaraman. Under my profile, you go down, you find webinar recording series, My Trading System. There are 1 to 10 webinars. Each is clickable. You can see that hand comes up once you take it there. And the title of the webinar is also shown. And you can click and learn what all explained as far as My Trading System is concerned in all the 10 webinars. Then if you have got any more doubt, you can ask during that of the my live webinar time frame, then I'll be willing to answer to those questions so that you will be able to really understand how my trading system works. And for the benefits of those who want to know about my trading system only, I just requested FXTrade people to display it under my profile in fxtrade.net. Then, Ellen, when you are setting the hedge, do you reset the hedge every day according to the low of that day in the EURO and GBP? Yes, certainly. Every day the market behavior varies. So we have to really use the hedging order corresponding to that of type of moves they are doing it in the market. Now they are doing lower level consolidation and they are likely to do a downward stop. And in such a case, then we can keep about 30 to 40 pips below the market level. You can keep the hedge order. And when they start gaining it, then you can tighten the hedge order. If you are doing position trade, straight keep 75 pips below that of the market, provided your position makes profit. Suppose you have got a buy around 1.30, then you can keep 75 pips below that of the market, the hedge order, and forget about it. And in case if they close your position of 75 pips, trailing stop or a static stop, in case if they close your position, and definitely they will give a better entry at the lower level. Okay. And if the position is not making profit, then you can use hedging order. And that hedge can be tight because as long as it is hedge order, we are going to release it quickly. So there is no need to keep quite away from that of the market because stop will close the position. There is a hedge order. We'll only take additional position in the opposite direction. That's all. Then therein. Okay, is there a larger gains and more stable moves in Australian dollar yen compared to Aussie USD? Yes, Australian dollar is expected to make a wide range swing and yen is expected to make upward move. When yen becomes weakened, then you will come across Australian dollar. AUD yen will make more big moves when compared to AUD. So when the numerator becomes more stronger, then in that particular cross, then the index will go up or the ratio will go up. When the denominator becomes stronger, then the currency will come down. And when USD yen, since it is a denominator in USD yen, and when it becomes stronger, what will happen? We just calculate it. The reverse of what? Because USD yen is a denominator currency. And here again, it is a denominator currency. So in Australian dollar, what will happen? It just studies, try to understand the relative comparison conditions of these currencies. So now it is 88.78 Australian dollar yen. So Australian dollar is with 1 pip negative net change, whereas USD yen is 29 pips positive net change. What happened to Aussie yen, which is in positive net change? Because the denominator, it is a denominator in USD yen, and in the Australian dollar yen, it is a denominator. So when this denominator currency weakens against US dollar, whereas Australian dollar is nominally weakened against the US dollar. So yen weakening is more when compared to Australian dollar. So as a result, you find that Aussie yen is showing positive net change. It is a negative correlation. So when the denominator gains, it becomes negative correlation. When the numerator gains, it is a positive correlation. So if you could understand that very well, then it is easy to identify the moves in the crosses. Then you enter into that of the trades of crosses. You will be really making very good profit. Instead, simply you look into that of the charts, and when the players make contrarian move, you still expect the currency to go up or come down. Then when they are making a contrarian move, you may see that opposite happening. So don't get trapped simply by looking into that of the charts alone. Look into that of whether they are making the USD gaining move, USD weakening move, or the contrarian move. And which way the contrarian move is happening, whether the numerators are weakened and the denominators are also weakened. That is, they are coming down. When the numerators are also in positive net change and the denominators are also in positive net change. So you have to find out which way contrarian move is happening, upward or a downward. Accordingly, the process will be handled. So the same principle that you have to find out whether it is directly correlated or inversely correlated. That way, if you could note it down, then that is common every time, irrespective of the moves. Then you can easily find out whether they intend to gain more levels. See, as I explained, Australian dollar, they are expected to gain less when compared to that of USD yen. So already you come across Aussie gain is less and USD yen weakening, or USD yen gaining or yen weakening is more. So as a result, you come across 22 pips positive net change. So already you find 100 pips spread. So they are likely to go to 89 area. So this way you can derive it. Then John, can you repeat how to tell a currency pair is active? Okay, when a currency pair is active, the spread between the low and the high will be more than 40 pips. So here it is not 40 pips. And USD yen, it is more than 40 pips. 95.93 to 96.64 between the high and the low. Whereas in the case of GBP, it is not active. So here about, you find roughly about 40 pips it is happening now. So here not at all. No, in the case of this one, Canadian dollar is just 19 pips. And in the case of Australian dollar, somewhat. And similarly, in the case of the crosses, it should be more than 70 pips. Find out whether it is more than 70 pips. Then that currencies will be active. So simply if we take Euro GBP, they are making only about 16 pips spread. So don't enter into Euro GBP cross now. So you can enter into that of the yen crosses. There the spread is more than 70 pips. So this is how you have to identify whether the currency is tradable at a given time. Okay. So here, how is Euro GBP cross in this week? Euro GBP cross is expected to come down, and for that they are expected to gain more levels in the case of Euro. More levels in the case of GBP when compared to that of Euro. So at the moment you find that Euro is dropping less when compared to GBP. It is a weak beginning, false move later on. You know that after Tuesday they will start dumping Euro GBP. For that they will gain more levels in the case of GBP and less level in the case of Euro. So every week they will make a weak beginning false move in every currency. So that we can easily identify whether they are making an upward move, then try to sell. If they are making a downward move on the weak beginning, then try to take a buy. Okay. Then Adisa, I am new to Forex and I am glad to join. Okay, that's good now. Thank you. Okay. Are you forecasting USD weakness as well as yen weakness? That is what it is, a contrarian move. They are expected to make. Euro, that is US dollar, is expected to weaken against Euro and GBP and strengthen against YEN and CHF. That is what going to happen the rest of this particular year. Then FXX. What about USD CHF? USD CHF is expected to gain more levels, as I explained. Okay, no more questions. So I'll just show the focus slide again. So swing and slide to start with during that of the Japanese session. Towards close, they are expected to make a small dip in the case of Euro and GBP. Then swing and rise during European and US sessions. Then this is for tomorrow. Every day you can log. You can just, this webinar is being recorded. You can just look into it. Otherwise, you can take a screenshot of this particular slide and refer to it if you want. And daily you watch in each session a matter of over 6.5 hours to 7 hours how exactly they are making the moves. Try to trade, enter and exit within the session so that you'll be able to really understand this session-wise forecast is helpful. Then the expected range also I have given it. So these ranges, you can make a note of it and you can update these the actual levels as the days proceed. And finally on Thursday I'll review this, what happened to this market. Then these are all the initial lows and the highs, and in our market reading, and none of the currencies they have breached the low or the high. They are only making small swings in all the currencies at the given time, at this time, and slowly they are expected to spread the gap between the high and the low during the European and US session. Week beginning, always they will try to make small moves in order to induce the traders to commit positions by looking into chart, looking into fundamentals, etc. Then once the traders commit positions, they know that the predominant of the traders are long, short. Accordingly, they try to make the moves in the market opposite to that of the predominant traders' pending positions. That's what. No, they create sentiment and act against the sentiment. Thereby, they are able to continuously earn money from that of the market. So, there's one more question here. Okay. Will the low of Monday be broken during that of the week? No, during the week they are not expected to. Only today they may just breach the initial low by a few pips and come up. Okay. So I'll come back again on 15th of August and try to review same time between 5 and 5:30 GMT, the Asian session live market analysis. So I take this opportunity to thank FX Trade and also you people who have come here to listen to my webinar, and wish you all happy trading. Watch the market carefully and trade wisely. Don't become emotional. Control your emotions. You will be able to see what is happening actually in the market. If you are under the grip of emotion, then the illusion is going to play a vital role in decision making. Then you may commit more positions and it may lead to overtrading, etc. So avoid overtrading and see what is the hidden secret or the hidden agenda of the players rather than what you see in the market. So thank you one and all. I'll come back on Thursday and try to explain to you further. So in the meantime, if you want to contact me through email, doctor@inoindices.com, you can send me an email. Otherwise, you can ask the questions in fxrate.net. I'll be willing to answer to those questions. Thank you one and all. See you on Thursday.